Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Yi. Good evening. Today is Friday, December 12th. I'm your analyst, Jiang Jida. Remember to like, subscribe, and share at all 3 time points. If you have any investment questions, feel free to leave me a comment. If I don't have time to address your question today, I'll make sure to cover it in the next class. It's Friday again already, and this month is almost halfway over. In just another half month, 2025 will be over. So remember, no matter how your investments have gone in the past, as we approach the end of the year, make sure to relax and unwind. I think I don't have to do a live stream next week, right? I'm starting to plan and use up the rest of my annual leave next week. So when I come back, I'll share with you all where I went for my vacation. Especially in this kind of slightly chilly weather, what's the best thing to do? It's perfect for soaking in hot springs. Just now, I remember someone online, May Daisy, mentioned that the weather is getting colder again. That's true, so everyone should take care of their health. For example, in Taipei, it started raining again today. So as the weather changes, make sure to take good care of yourselves. Make sure to keep yourselves warm, everyone. Hello to everyone. Hui Zhuan, Mei Daizi, and Yu Lenge. Good evening. Also hello to Fei Deyu, Jeff Lin, and Coco Coley. Good evening, good evening. Now, let's first take a look at today's investment highlights. The first one is, there are no major economic data releases tonight, but we still can't ignore the important events happening around the world. So the first topic, what about the Fed? Is the Fed preparing for a major shakeup? Trump has always wanted to place his own people on the Federal Reserve Board. So as the Fed is undergoing this so-called major reshuffling of its board members today, did this shakeup allow Trump to get his way? Of course, this will determine what direction next year's monetary policy might take. So let me give everyone an update on whether the Fed's board reshuffle was actually successful today. On another note, regarding geopolitical risks, the stalemate between Ukraine and Russia remains difficult to resolve. And what about Ukraine's leader, Zelensky? Today, he mentioned his differing views on territorial concessions for peace. What are his views, and how might they impact geopolitical risks? This is a key point of attention. As for industry, among all sectors, those related to AI, whether sectors or individual stocks, are still in focus. Yesterday, during our earnings report analysis, we reminded everyone that Oracle's third quarter report did not meet market expectations and fell short. It even includes the fact that their cash flow dropped to negative $10 billion, which is a huge amount. As for revenue, it merely stayed flat, while capital expenditures surged significantly. But with revenue remaining unchanged, we saw Oracle's stock price plunge yesterday. So after such a big drop, maybe some AI companies will perform well and could have some highlights when their earnings are released. For example, companies like Broadcom and Disney. Broadcom's earnings, which were announced today, were actually quite impressive. So why did Broadcom's stock price actually plunge in pre-market trading today? And then there's another company, Disney. Disney has also gotten involved with AI today. As long as a company is even slightly connected to AI, the market's imagination just goes wild. So what exactly is the connection between Disney and AI? And then there's another company we talked about yesterday, the big manufacturer of yoga mats and yoga apparel. Lululemon, that is Lululemon Athletica, this company is also a favorite for many people when it comes to yoga products, especially among women. Their financial report has also been released. If you look at their earnings from the first and second quarters of this year up to the third quarter now, and even their full year outlook, their past financial reports have all performed poorly and have fallen short of expectations. However, in the financial report released today, there was actually some better than expected news. Will this positive surprise be enough to help its stock price start to rebound? Because if you look at their stock price since January this year, it has dropped all the way down from above $430 to its lowest point this year, $160. Overall, after this earnings report was released, is there a chance for this lemon to stop being so sour? Tonight on Genius Good Evening, we'll have a good chat with everyone about these related topics. All right, good evening to Melissa, good evening to Caesar, and also good evening to Anaya. Good evening, good evening, Louis, Grandpa Yang. Friday nights, honestly, I think everyone works really hard. Even on a Friday night, you all still make time to tune into the live stream. If it were me, well, of course, I hope you all listen to the live stream, because when it's live, sometimes you leave me messages and we can interact. That way I know, hey, what kind of questions do y'all have? Of course, I can respond to them. But usually, if I'm feeling a bit lazy when I get home, I mostly just watch the replay. I usually watch the replay. Unless I really want to interact live online, then I'll watch the live show. Otherwise, honestly, I think everyone works really hard. Sometimes during the winter, we're online chatting with everyone after 9 o'clock every night, and we see a lot of students and friends joining in. Everyone is online together, attending the class, right? Remember to like and subscribe while you're watching, and please help us share it with more people. In this community, let's interact more with each other so we can all do better on our investment journeys. All right, first, let's take a look at the economic data. Yesterday, I gave everyone a brief update on this. Last night around 11 o'clock, there was a relatively neutral data release. It was the US data for September. The wholesale sales growth rate, the previous value was minus 0.2%, the forecast was 0.4%, but the actual published figure was the same as the previous value, both at minus 0.2%. We mentioned this data to everyone yesterday, saying it was relatively neutral, so just take note of it and move on. There aren't any important events happening tonight either, so it should be considered a relatively calm Friday, a pretty peaceful Friday. But when it comes to individual stock performance or trading individual stocks, everyone still needs to pause, observe, and listen a bit. After all, with the US stock market at historic highs, for some companies, there's a chance they'll keep hitting new highs along with the market. Those are the stronger stocks you can pay attention to or continue to hold. But for some companies, they might just be rising because the index is making new highs. They might be quietly dropping or sold off. In the US market, Chinese, Japanese, or even Taiwan's stock market, it's all the same. Those closely tied to AI are benefiting. If a company isn't tied to AI, to be honest, while the major indexes, whether it's the US market or Taiwan's market, are hitting new highs, you'll notice that some companies honestly just keep trending downward, as if there's no bottom in sight. This means they're not part of the current mainstream sectors, so when there's a rebound, you really need to weed out the weak and keep the strong. That way, when we look ahead to the market in 2026, you'll have a better chance to earn even more profits. All right, after looking at the economic data, what officials have to say becomes really important. Speaking of officials, they're very important in Taiwan. By the way, good night, little donkey. I thought the Taiwan stock market was about to hit a new high, but then Yunnan came in with a big black candlestick. If there's a chance later, I'll talk more about this. But it's still the same old saying. Whenever there's a new high, just remember that after a new high, it's usually easy for the market to pull back. When it pulls back, just wait for another buying opportunity. Don't chase at the top. As long as there's a pullback with lower volume and the chips aren't out of control, you're fine. As long as price and volume aren't out of control and the moving averages are still trending upward, you can treat the moving average during a pullback as a short-term support and a point to add to your position. Now, about the Federal Reserve, let's talk about whether this is a complete overhaul. In this round of adjustments to the 12-member Federal Reserve Committee, did Trump get involved? The answer is no. Why? Because he couldn't get involved. So what exactly happened? Today, BeatBet said that the process was extremely fast. They agreed today to reappoint all 11 Federal Reserve Bank presidents. All of them, without exception. Not a single person was replaced. Everyone was reappointed. Except for one person. Except for one person who is about to step down. So they didn't appoint a new member to take on this position. That's Bostic from Atlanta. He will step down at the end of February next year. As for who will replace him as the new member from Atlanta, it's still undecided at this point. But as for the other 11 Federal Reserve presidents, basically all of them have been confirmed and reappointed. So in other words, Trump wanted to get involved and replace certain people with his own picks, but this time it looks like he won't be able to do that. Because he said that the unification of the Federal Reserve means that the terms of the presidents or vice presidents inside are set. Their terms are automatically extended for another 5 years, so actually it's another 5-year extension. Originally, these members' terms were supposed to end at the end of February 2026, but this time, if these members continue to be reappointed, they'll serve another 5 years. So unless someone is willing to resign, in principle, their 5-year term won't change. So why is he doing this? To put it bluntly, he said, why do they want to rush and get all of this settled before the end of the year, to get everything done, to get all the reappointments approved? The reason for approving the reappointments is because he wants to ease the uncertainty caused by these people. So why is it so simple? First, they're worried that Trump will get involved, which could affect the so-called independence of the Fed. Also, on December 3rd, Treasury Secretary Bessent mentioned that he plans to propose that if a Federal Reserve chair hasn't lived in the local jurisdiction for more than 3 years, then they're not qualified to take the chair position. Okay, so obviously the idea here is to replace some of the committee members. That's why he said if you haven't lived in this jurisdiction for at least 3 years, then you're not qualified to be the chair. Because if you haven't lived here that long, how could you possibly understand all the local happenings? How's employment? How are prices? Or what about people's consumer spending and household situations? You might not be clear on any of that. So he said he wanted to set a 3-year threshold, but this plan hasn't been finalized or implemented yet. Then the Fed just went ahead and directly replaced all 11 Federal Reserve Bank presidents. So what does it mean to approve all of them for another term? In a way, it's really about trying to block Trump's interference. Now, you might ask, does blocking Trump's interference mean Trump is completely powerless? Not really, because Trump is very clear about this. Basically, starting next year, even though some of these committee members have been reappointed, and it seems like he can't interfere, don't forget this. There are still some administrative pressures that can be applied to all these Federal Reserve officials. For example, next year, when Fed Chair Powell is set to step down, and among the current board members, people like Michelle Bowman and Christopher Waller, whose side are they really on? They're all on Trump's side, while some of the other members lean dovish and some are more hawkish. We'll just have to watch how things unfold over time. In any case, Trump definitely won't let this go. He won't give up. I just want everyone to know that at the Fed, around December, near the end of the year, they made this move mainly to prevent Trump from interfering. But honestly, we can only say that next year, Trump will keep trying to interfere anyway. Overall, the Fed's monetary policy is still leaning dovish. Why is it dovish? It's just like we explained in detail yesterday during the rate decision and in our commentary. This includes things like how much inflation is expected to rise. As for the unemployment rate, according to Powell, in the future, the unemployment rate might increase by at most 0.1 to 0.2. So this range, this anchoring effect, means the unemployment rate will probably fall around 4.5% to 4.6%. As long as we're within this range, there really isn't any major issue. It means there hasn't been any significant loss of control in the job market, nor has there been a collapse. So as long as we're in this space, the Fed will naturally move toward rate cuts. You don't need to worry about a recession. Don't go thinking, oh no, it's turning into a recession. If things cool down a bit, then everything is easier to handle, much easier to handle. Oh, and another thing, The Economist, just to add a little, we can just take a quick look at this. The Economist mentioned that the S&P's current price to earnings ratio is already approaching the peak level seen during the dot-com bubble in 2000. If you use the projected interest rates for the coming year as a benchmark, they believe that some Asian countries like Japan, South Korea, and Taiwan are relatively much more reasonable. They're still relatively low. Now, I don't know exactly how they're making these comparisons. They're not discussing the index levels. They're comparing the price to earnings ratio and the price to book ratio with the US because they believe the US market rose significantly. So by comparison, they believe that. Right now, the price of the Taiwan stock market is about 30% cheaper than the US stock market. And as for the PB ratio, that is the price to book ratio, it's also less than 3 times, not as high as in the US. So it's just for reference. Now, does that mean The Economist is saying, the US stock market has risen a lot, so does that mean we should buy Taiwanese stocks, Japanese stocks, or Korean stocks? Should we move all our funds into the Taiwan, Japan, or Korea stock markets, or Asian stock markets in general? Actually, I don't think that's necessarily what we should do. You can gradually build your positions in batches. Will you invest? But honestly, today, whether it's the Taiwan, Japan, Korea, or other countries' stock markets, who are they all looking to as a leader? It's all about the US stock market. So the one really leading the entire global stock market upward, the biggest, the main driving force, the biggest cash cow, is the US stock market. That's why you should probably allocate more of your extra funds to US stocks or investments related to the US market. The main focus will be on which sectors are related to AI and so on. And when it comes to the stock market, which Taiwanese stocks are more connected to AI or are closely tied to the US supply chain. You should buy those companies. Yes, you can position yourself this way, but in the end, you still have to watch how the US stock market performs. These stocks will only go up if the US market goes up, so you shouldn't reverse the cause and effect relationship. Don't think, wow, because the Japanese and Taiwanese stock markets are relatively low, maybe their PE ratios are lower, so I'll put all my money into the Taiwan, Japan, and South Korea stock markets and just wait for the day they go up. That would drive the US stock market up. But no, it's actually the opposite. Only when the US market is strong will these other markets follow. If the US market ever falls, these markets won't suddenly surge ahead just because the US is taking a break. Usually, if the US market goes down, since it's the global leader and locomotive for industries, when it drops, it's very hard for the Japanese or Korean markets to stand out on their own. Most of the time, they'll go down together with the US market. So you can take a look at the Economist's argument, but I still think the most important thing is to keep your eyes on the US market as the main indicator. All right, everyone. Good evening. Good evening. Good evening. Hope you all have a great weekend. Justin, good evening to you too. And Amy Lee, good evening as well. Good evening to Ji Kao Jia. And let me see who else. 006. Okay. And Ice Ice Boy said, I wonder if Teacher Jang has any predictions for the upcoming Lunar New Year. Can you use the timing of the snake year as a reference? This year is the year of the snake. It's all ups and downs. What goes up must come down. February and March saw drops until April. Then it climbed back up. Like a snake, it moves up and down, unlike last year's Tiger Year, which shot straight up. So what about next year? if I remember correctly, next year is the year of the horse. The year of the horse, well, you know, horses gallop. They just charge forward. So if we look at it symbolically, next year, the year of the horse, should basically perform not too badly. It should be better than the year of the snake. I remember that in our past investment seminars, we often looked at the S&P index, the stock index, over the past 75 years, and analyzed how it performed each year according to the Asian lunar zodiac, the 12 animal years. So what did we find? The year of the snake is the worst. Which year is the best? The year of the ox or goat performed best. As for the year of the horse, it's better. Next year, the year of the horse. Horses gallop and charge ahead. But remember, when horses gallop, watch for sudden kickback. Horses can kick backwards, so be careful. When charging ahead, you might feel like, wow, the US dollar and stocks are going down due to rate cuts, and it seems the market and capital flows look good with plenty of hot money. And then Trump keeps trying to boost the market with all kinds of policy moves because he's running for election next year, right? So when you're during this wild ride online, you might feel like you're about to be crowned a marquise at any moment, and it feels really great, right? But don't forget, a horse usually has a final kick or a sudden move at the end, or it might just kick back after you've passed. So you really need to pay special attention to that, okay? Anyway, when the time comes next year, we'll have a good chat about these symbolic things. So just be a bit cautious in the year of the horse next year. It won't be too bad, but when it comes to trading and holding stocks, you still need to be careful. Don't get too carried away or overly complacent. Don't let success go to your head, because there might be some follow-up actions. We'll talk more about that when the time comes. All right, snakes come and go, and the dragon and horse gallop forward. Yes, everyone knows these idioms. They're really good. All right, now for the section on the Public Security Bureau. 4.16, just look at this. It's not important. The key interest rate is 3.6, and the number of rate cuts is at 0.94. Next year's forecast, by 2026, based on current knowledge, joint committee, and official statements, there should be about 1 or 2 rate cuts next year. I don't think it'll be as few as just 1. Given that Trump really wants to cut rates, even though the current Fed dot plot is projecting 1 rate cut next year and another in 2027, that's just the dot plot. But will it change? Will it change? For sure it will definitely change. They will definitely make adjustments. Every time the dot plot comes out in March, June, September, and December, almost every time they make adjustments, almost every time. So I think predicting 1 to 2 rate cuts next year is actually a conservative estimate, as long as there aren't any major issues like inflation. If inflation really turns out the way Powell said yesterday, he said that inflation will peak in the first quarter of next year, and that in the first quarter of next year, inflation will reach its highest point, then start to decline in the second half of the year. If this logic and this calculation are correct, that means the Fed could start cutting rates gradually after the first quarter, with possible rate cuts in March, June, and September. Logically, that's how it should be. So you ask whether there will only be 1 rate cut next year. I actually think the chances of that aren't that low. It might end up being 2 cuts. As for which month, well, we'll just take it as it comes, since this year isn't even over yet. So next year, we can wait and see. There's still plenty of time. Anyway, I think next year is going to be a pretty interesting year. Next year will be an interesting year with the election. With the election coming, let's see what outspoken Trump says next. It's entertaining. Guessing what he'll say is interesting. How the stock market reacts, we'll watch and see. As for the US dollar index, in the short term, it's still relatively weak. Because of expectations for rate cuts, the possibility of rate cuts happening sooner, and the stance on rate cuts next year, all adding fuel to the fire. The US dollar index continues to be on the weaker side. So in the short term, it's basically in a weak, fluctuating state. Even though it rose slightly by 0.01% today, it's still below both the 50-day and 200-day moving averages. In particular, the 20-day and 200-day moving averages are really pressing down hard on it. So in the short term, the US dollar remains relatively weak. Okay? Alright, it turns out that the scientific lens is actually a bit mystical. Just take it as a reference. Good evening, Aya. Sometimes when we look at the market every year, from the year of the ox, tiger, rabbit, dragon, snake, horse to goat, right? Actually looking at it year by year can be pretty interesting. You'll notice that the trend each year, for example, in the year of the rabbit, things are lively, but rabbits don't jump very high. They just hop 3 steps forward, 1 step back, 3 steps forward, 1 step back, slowly hopping along. So if you look at the market in the year of the rabbit, that's how it goes. Then there's snake, horse, and goat. 4 is rabbit, 5 is dragon. In the year of the dragon, it soars straight up to the sky. In 2012, it was the snake, slithering back and forth, winding and floating, twisting this way and that. Prices are generally going up. Next year, which is the year of the horse, actually has its own interesting aspects too. We'll take a closer look when the time comes. As for geopolitical risks, there's word going around that this Saturday, the US, Ukraine, and Europe will be holding talks in Paris to try to resolve the war in Ukraine. Honestly, you just need to be aware of this stuff. That's all. Why? Because every day they're talking about resolving the Ukraine issue, resolving the Ukraine issue. One day it's in Paris, another day it's in Turkey, or maybe Switzerland or somewhere else. It's always like that. Are they just touring the world or what? Anyway, these talks are being held in all sorts of places. They keep holding meeting after meeting, saying they want to help Ukraine, or that certain weapons will be banned, or that they'll sanction Russia. But you've been saying this for 3.5 years now. So do I think this Saturday's Paris talks will actually resolve the conflict? I think it's pretty unlikely. The stalemate isn't changing. And today, Ukraine's President Zelensky brought up something new again, which I also think is pretty good, pretty interesting. Basically, everyone just takes a look and moves on. He talked about the issue of territory, whether or not to cede land. He said, I don't want to. I don't want to give up those 5 regions, those 5 oblasts, to exchange for peace. He said, either do it through an election, which basically means changing the president. Zelensky steps down and someone else takes over. And then we talk again. Or use a referendum, letting all Ukrainians decide whether to give up those 5 regions and then cede territory in exchange for peace. Basically, I think the chances of that happening are pretty slim, because if you say you want a referendum or you want to hold an election or whatever, so to put it simply, what he said is basically the same as saying nothing at all. So throwing the problem to an election or a referendum just means he doesn't really plan to deal with it. As for whether anything significant will come out of Saturday, I think the chances are low. So let's just wait and see. But geopolitical risks won't really heat up or cool down because of this. Things will just stay the same. All right, so as for crude oil prices, the OPEC monthly report and the IEA monthly report are taking slightly different stances. The OPEC report says that the current crude oil supply and demand seem balanced. There's no oversupply. But the IEA, the International Energy Agency, in its monthly report, which is also released every month, we're talking about the 3 major monthly reports on crude oil worldwide. One is OPEC, another is the IEA, and the third is the EIA monthly report. These 3 reports are usually released one after another every month, typically within a couple of days of each other. Of course, the OPEC monthly report is the most important, since it's published by the Organization of the Petroleum Exporting Countries. But usually, the content of the OPEC report is it's a bit more positive, and usually doesn't talk too pessimistically about things like declining crude oil demand or massive oversupply. Generally, the OPEC monthly report tends to be a bit more optimistic, leaning toward the positive side, because after all, it's published by the Organization of the Petroleum Exporting Countries. They can't make things sound too bad. If they did, it could trigger global panic or dissatisfaction from the United States. The OPEC monthly report is more optimistic. IEA and EIA reports? We've tracked that these organizations' reports are usually more pessimistic than OPEC's. Indeed, this latest IEA report said, OPEC says supply and demand are unchanged, that supply and demand are balanced. But the IAE states next year, oil supply will exceed demand by nearly 4 million barrels. How can there be such a big difference? One says supply and demand are balanced, the other predicts a 4 million barrel excess. Anyway, no matter what, the current crude oil market is still relatively weak. That's a fact. Right now, demand in the crude oil market is still on the softer side, so the situation for oil prices is still more bearish. Just to put it simply, as long as oil prices remain bearish and weak, then of course, what does that mean? It means we don't need to worry too much about inflation, because inflation won't be pushed up. All right, AlphaGo's earnings report. So is this good or bad? I'll talk to you about that in a bit. Amy Lee, today I want to talk to everyone about AlphaGo. Why did its earnings report beat expectations? But why did it plunge before the market opened? There's a reason for that. Let me add a bit more on the macroeconomic side. And finally, let's take a look at the earnings report section, as I just mentioned. Moving on to Broadcom. So Broadcom, basically there are only 2 companies in the world that specialize in making SoC chips, which are ASICs, so-called application-specific integrated circuits. These are different from NVIDIA's general-purpose GPU chips. We've always discussed a simple topic with everyone. General-purpose chips, you can imagine, are like when you're mining, whether it's coal, copper, gold, or diamonds, you need a power drill. The power drill represents the concept of a general-purpose chip. It can dig anything, it can handle anything, and it's a good tool with high performance. But its cost is high and its price is expensive. But its efficiency is relatively high. That's the general-purpose chip from NVIDIA. Now, if today you only want to mine copper, or only want to mine diamonds, or just want to mine coal, some specific type of mining, and you only want to focus on that particular mineral, then what you need isn't a power drill, because some minerals aren't suitable for being mined with a power drill. If you use one, the mine might just collapse, and you can't exactly use a power drill to mine diamonds, right? You should approach it slowly, bit by bit. At times like this, you might need a shovel or maybe a spade and so on. So that's how these more specialized tools came about for specific applications. That's what's called an ASIC chip, which is a chip designed for a specific application. So who makes those? Not NVIDIA, not NDC. The two most famous companies in the world are Broadcom and Marvell. So these two companies are the main players making application-specific chips, especially Broadcom. Their growth and revenue look even better. Why? Because they have ties with Google. Google's TPU chip is specifically designed for training AI, a special application chip just for that. TPU chips made for AI training. These are designed and manufactured by Broadcom. That's why Google's GMS is selling extremely well, performing excellently, and getting high praise in the market. People wonder, wow, how come the TPU chips are so good at all kinds of computations? They seem really impressive. The power consumption is low, the performance is high, and the price isn't as expensive as NVIDIA's. Plus, they're specifically made for training AI, and the results are great. So who benefits? Google stock goes up, hitting new highs. And who's manufacturing the TPU chips for them? That's Broadcom. Logically, Broadcom should be making a killing by designing and manufacturing these chips for Google. Their performance should be outstanding, right? Their stock price is also hitting new highs, right? Yes, their stock price is also reaching new highs, which is great. But then what happened in their financial report? The financials looked really good too. So if the performance is so good, you might ask, teacher, why isn't Broadcom soaring like Google? Why did it drop sharply before the market opened today? The important reason is that when we look at these financial reports, remember, don't just look at whether their revenue or profits beat or missed expectations. I've told everyone before, beating expectations is just the baseline score. What we call the baseline is like this. If you're a good student, a really smart student who always does well, and you get a 90, that's just your baseline score. 90 is simply what a good student is expected to get. It sounds a bit harsh, doesn't it? That's why sometimes it's tough to be a good student. The teacher will think, you're the top student. You're always one of the top 3 in class. And every time you get 90 or even 100 on your assignments. But if one day suddenly, the day before, you had diarrhea, so you didn't do your homework and you didn't do well on the test. Because of that, you suddenly get a weird score, like 85. At this point, classmates or the teacher might say, hey, aren't you always in the top 3? Why did you only get 85 on this test? Is something wrong? What happened? Do you need to get a tutor? Then a lot of doubts and a lot of voices start to come up. So sometimes I feel like students who are always in the top 3 and do really well actually have a lot of pressure. For people like us who are more in the middle of the class, not those super impressive students who get into places like NTU or Jianzheng, our pressure is a bit less because we're just in the middle of the pack, right? If you get an 80, people just think that's normal for you. If you occasionally score a 90, people say, hey, not bad, you've improved. But if you drop from 80 to 70, they'll say, it's okay, it's not a big deal. 80 is your standard, and 70 isn't that much of a drop. So for those of us in the middle of the class, the pressure or attention from others isn't as intense. But Botong is a student from the top of the class. Since they're top students, just like with answering questions, there are higher expectations for their revenue and profits. This time, third quarter revenue was actually pretty good. Honestly, $18 billion, up 28% year over year. So there's growth and it met expectations. EPS was $1.95, also growing, which is great. The AI-related division even grew by 74%, reaching $8.2 billion. All those semiconductor, VMware, and other software divisions are growing too, all meeting expectations. Not bad. Q4 revenue, $19.1 billion, nearly 30% year-over-year growth, in line with expectations. All the key points are in line with expectations. Logically, this should meet the market's requirements for a good performer, right? So there shouldn't be any problem, right? At the very least, the stock shouldn't fall. Maybe it won't rise, but at least it shouldn't drop, right? But that's not the case. So why did it plunge? Well, it's because of what the CEO said afterward. The CEO, if I remember correctly, he's also of Chinese descent, maybe from Malaysia or somewhere else. I'm not sure what his name is. Is it Jensen Huang or Huang Ransun? So the CEO, he said just one thing. And as soon as he said it, everyone started paying attention. He said that right now, Broadcom has a backlog of $73 billion in AI orders. But as soon as this number came out, honestly, it would have been better if he hadn't said anything. Once he said it, the market thought it was too little. The market felt it was too little. The gap in expectations was because the number he gave was too low. A backlog of $73 billion in orders doesn't match market wants, not proportional. The CEO said that $73 billion is the minimum. He emphasized his honesty. The 73.1 billion is the lowest since the fourth quarter, our lowest estimate. It will definitely get better. In the next 6 months, these orders and revenues will keep growing. But because he mentioned 73.1 billion and it sounded too low, the market reacted like, wow, how come it's only 73 billion? It's not like yesterday when, who was it? Amazon said its backlog. No, not Amazon. Oracle. Oracle said its backlog of orders is $520 billion. $520 billion. And then today, well, didn't Broadcom do pretty well? But its backlog is only $73 billion. So there's a gap there, but that's just the concept. And in addition, he mentioned that in the fourth quarter this season, they secured another major AI platform company called Anthropic. When we talk about the top 3 leading companies in AI, it's OpenAI, Google's Gemini, and then Anthropic's Claude model. So he said there was a $10 billion order in the third quarter. And then in the fourth quarter, there was another $11 billion order. Both pretty good, right? Both are pretty good. But then the CEO went on to say, he warned him, saying it's nothing, but still warned him. He actually warned him, warning that although AI products are seeing increased orders because there's more competition in AI product sales, the profit margins for current AI products are narrowing. All right, this is what makes everyone feel a bit confused. Your third quarter revenue exceeded expectations and performed really well, growing by 74%. Then, for the fourth quarter, you said the revenue outlook is also great, with a backlog of nearly 75 billion, and you keep getting new orders. But in the end, you actually told everyone, you need to give everyone a bit of a warning. The profit margins for AI products are shrinking. In other words, whether it's gross margin or net margin, they're just not as good as before. Maybe it used to be 70%, but now it might be 65, 68, or even 60. There has been some reduction, but is it still good? Yes, it's still very good. But because he said this, everyone started to wonder, hey, your revenue is growing so much, your revenue keeps improving, but while your revenue is growing, why are your profit margins shrinking? So this actually makes the market view this financial report in a negative light, because people aren't just looking at one thing. It's not just that they've already released their third quarter results, but people are also looking at whether future profit margins will drop because of this. That's what the market is worried about. So this situation is a bit different from Oracle's. Basically, Oracle's third quarter financial report already fell short of expectations. And then Oracle's problem is its cash flow. The free cash flow, that is. The cash flow is negative. Yesterday, we used a simple analogy. Oracle's problem is even bigger. For Oracle, capital expenditures are increasing, and this year they said they're going to raise it to $50 billion. Capital expenditures increased significantly by $15 billion, but in the end, their fourth quarter revenue only met expectations. It didn't surge, just met expectations. And their cash flow is negative, and it's still expanding. In other words, your capital expenditure costs are rising, but your revenue isn't increasing. And on top of that, your cash flow is getting worse and worse. So their problem is 100 times worse than Broadcom's. It's a big issue. That's why Oracle's stock plummeted yesterday. But Broadcom's problem isn't like that. Broadcom is like a good student, scoring 99 out of 100. Right, so if you score a 90 or 100, but you don't do well in the test and you end up failing, plus he mentioned that their profit margin has declined, this is something everyone needs to pay attention to in the upcoming financial report. We need to see if the fourth quarter financials actually show the profit margin dropping, as he said. If, when the fourth quarter report comes out, we find that the profit margin hasn't narrowed, or even stayed the same, or maybe even increased, then the market's concerns will be eased. And once those concerns are gone, the stock price will recover. It will come back, but the pre-market pressure today is going to be pretty heavy. That's the situation we're looking at. Okay, so let's take a look at Broadcom's stock price. In terms of performance, it dropped slightly by 1.6% yesterday, but today in the US pre-market, it's down sharply by 6%. Now, you should check if this 6% drop still keeps it within the area I've circled in red, that is, around the monthly and quarterly moving averages. If it's still holding at those moving averages, then there's no need to worry too much. You can just treat it as a short-term fluctuation. After all, Broadcom still has Google as its biggest, most important client, supporting them with the design and manufacturing of TPU chips, which is crucial. As long as Google doesn't go under, Broadcom basically won't have any major problems either. However, regarding the earnings report, their CEO mentioned something that I think is a bit more... there are some areas of concern, a bit of doubt, so let's just keep an eye on it since the profit margin has gone down. It's just like what KQ Lee mentioned. Yeah, the gross margin is being criticized. See, Hang brought this up again. All right, no, thank you. Good evening, good evening. Oh, it's not really about missing orders. It's not about order delays. It's just, like you said, they're being very honest about it. Their financial report is very straightforward. They're saying their future profits will shrink because competition is pretty intense. Being honest is a good thing too. You don't want the market to have unrealistic expectations, thinking that just because your revenue is growing a lot and you're getting a lot of orders, your profit margin will keep going up and up. Sigh, that's just impossible, right? That's something that can't happen. Because that's just how an industry works. When you move from a period of rapid growth toward maturity, your gross margin and profit margin naturally start to slow down from those high growth levels. So this is something you could have expected all along. It's just that when he actually said it, well, how should I put it? The feeling was like, okay, everyone was in a frenzy. Right now, AI is throwing a party and everyone's having such a great time. It's like, at midnight, Cinderella hasn't shown up yet. She hasn't turned back into Cinderella. The carriage hasn't turned into a pumpkin yet, right? The horses haven't turned into mice yet. You all know the Cinderella story. Before the clock strikes 12, then suddenly, maybe the DJ playing music says, hey everyone, in a bit, at midnight, the lights are going to be turned off, the venue needs to be cleared, and the cocktails need to be finished. No more drinks for anyone. It's like someone comes out and kind of kills the vibe. Everyone's having a great time, it's only 10 o'clock, and the party doesn't end until midnight. But at 10, someone starts telling everyone, hey, we need to start getting ready to clear out soon. We're going to clear the place soon, and later we're going to start charging for tickets, and the price will go up. That's the kind of feeling it gives you, you know? You get what I mean, right? That's the idea. Broadcom is being straightforward, letting everyone know things will be closing at midnight. Like, at midnight, the carriage turns back into a pumpkin. When midnight comes, services won't be as extensive, so everyone should get ready. But they're saying this way too early. It's only 10 o'clock, and midnight is still far off. That's just the impression I give people. But honestly, Broadcom's fundamentals and financial reports are solid, and technically they're still very stable, really steady. Okay, now moving on to the next point. Musk going to Mars. Oh, right, I heard his SpaceX is planning to, go public next year? He himself promised an IPO in 2026, so I think that's going to be a huge topic next year, a really big story. If Musk's SpaceX with its reusable rockets actually gets a chance to IPO next year, wow, that would definitely cause a big stir in the market, because I heard its current valuation is 1.5 trillion. A valuation of 1.5 trillion US dollars. Just imagine if it goes public, how much capital it would attract or how much money would get locked in there. Anyway, when that happens, Musk's net worth will probably multiply several times over again. Also, Panda1249 asked about my views on gold and silver. All I can say is, due to regulations, we're not allowed to specifically analyze gold and silver on this program. So when you're looking at gold and silver, just try to pay attention to what the Federal Reserve is doing. When it comes to interest rate decisions and policies, as long as things are moving toward rate cuts, usually when rates are cut, the US dollar tends to fall and gold tends to rise. It's like a seesaw. When rates are cut, the dollar tends to drop, and as the dollar goes down, gold goes up. On the other hand, if rates are raised, or if the policy is more hawkish, then of course the US dollar will be stronger. When the dollar is stronger, gold and silver are more likely to fall. Of course, silver also has some industrial demand factors. I can only briefly mention here that you should pay attention to the interest rate decisions. As for the trends in gold and silver, we might not be able to go into more detail right now. Because of regulatory restrictions, we can't analyze this particular commodity with everyone here. Alright, Trump claims he's the greatest president in American history. I think, well, some people say that's just his businessman personality, right? That's just how business people are. Okay, let me also add something about OpenAI. So, what did OpenAI say? They just released the latest version of ChatGPT, which is version 5.2. This version is really impressive too. I don't know if any of you have tried it out yet. They said they tested it across 9 major industries, 44 professions, and 1,320 different scenarios. After testing this 5.2 version, yes, it's already at 5.2, not 4.5 or just version 5, but 5.2 shows that in the latest version, 74% of its performance surpasses that of humans. Wow, that's it then. What are humans supposed to do now? 70% of its capabilities are better than humans, including things like spreadsheet processing, document creation, coding, image and long text comprehension, and a whole bunch of other stuff. Altogether, 74% surpasses humans. So think about it. Which one are we? Are we among that 26% of people who are even more talented and capable than the 74%? Most people probably aren't. Some classmates might be really outstanding, and I admit that I'm probably not one of them. I honestly admit that I definitely wouldn't be in that 26%. I'm definitely among the 74%, those people who are worried. We're just ordinary people. Most of us are just regular folks. So when GPT 5.21 comes out and people say, wow, it's replaced me, hold on, do you really know how powerful AI is? Our company developing AI, working on documents, audio, and video. You know, with the current technology, AI really can do just about anything. Think back to when ChatGPT first came out 2 or 3 years ago in 2023. When it was just released, we saw what it could do, and now look at where we are today. We're working on that. Let me put it simply. We're doing this kind of market analysis or writing investment reports. You know how powerful AI is now. You just give it a command, tell it, please summarize the major international events happening this week, next week, or recently. It generates a draft for me, doesn't even take 15 seconds, not even 10 or 15 seconds, and a draft comes out. It's all laid out, point 1, point 2, point 3, point 4, with an introduction and a conclusion, and it's written so thoroughly, right? If you take this article and throw it to GPT or Gemini 3.0, do you know what happens? You just give it the draft and tell it, I want to make a presentation based on this content, and I need images, I want animations, and it should last 15 minutes. It will create a complete report for you. That report will turn your draft directly into a presentation, and it will be rich with both text and images. What's even more amazing is that if you take that presentation and the draft and give them to another AI and tell it, please generate a related video for me. Not just a presentation, but a related video. I want a host, I want guests, and I want them to have a Q&A conversation with each other. This report gets turned into a video, and when it comes out, you realize, wow, there are male hosts, female hosts, and guests. The content of their conversations is just like watching a fully produced YouTube podcast. It's like you can direct, perform, and enjoy the whole thing by yourself, and just hand all the materials over to the AI, and it generates everything for you. So it just generates everything like that, right? I was thinking at the time, wow, I can just take a script. I can even ask AI about the content of the script. So that means maybe one day in the future when you see Mr. Zhang's show, we won't even need to make the show ourselves, right? We can just throw the script to AI, to Gemini, to GPT, and it'll make it for us. It can even generate the video using my face. And then it can even use my mouth to lip sync the words. So it's really amazing. The future is honestly, it's hard for us to even imagine what kind of possibilities there will be. Up to this point, we can already do what I just described. One command and everything is handled from start to finish. Text, briefing, video, conversation, all of it can be generated. I've already seen this kind of thing. It's pretty scary, really scary. Of course, as long as you have anything to do with AI or learn something from it, your stock price usually won't stay low for long. For example, take Disney. Disney just announced something today. They said they're making a $1 billion equity investment in OpenAI. $1 billion honestly isn't that much, about 30 billion new Taiwan dollars, especially compared to Microsoft's investment of $13 billion, Disney's investment is actually pretty small. So what are they doing with this investment? They said that in the future, users of Sora, the video generation software, these Sora users will be able to appear in AI-generated videos. They can generate content featuring Disney characters like Mickey Mouse, Darth Vader, or Cinderella, any character really, as long as it's authorized for 3 years. Basically, as long as it's related to AI, Disney's stock price just shoots up, it just goes up. Now, let me share something interesting with you. Some people have been saying, have you noticed that since we were kids, we've been watching those Western fairy tales, right? For example, companies in Guangdong, well, whether it's Mickey Mouse or say Snow White, Disney has so many characters. Snow White, Sleeping Beauty, Cinderella, or Rapunzel, and so on. Have you noticed that in these fairy tale books, someone actually took screenshots of them, which is pretty interesting. There's always a Prince Charming in these stories, right? There's always a Prince Charming, right? There's always a prince who kisses the princess to wake her up, or sometimes the prince has to bring a glass slipper, and the prince is always there to save the princess. She said that in those fairy tale books, every single Prince Charming, every one of them, looks exactly the same. I just mean that in these fairy tales, all the princes look the same, but every princess looks different. So they were joking that the prince is kind of a player, because in every fairy tale, he plays the role of the prince. Sometimes he's looking for Snow White, sometimes for Cinderella, sometimes for Aurora. Someone even took out the storybook and noticed, weirdly, that almost every prince looks exactly the same. Every single prince. At most, their outfits are different, but every prince looks the same. If you have time, you can check out some fairy tale books to see if it's true that all the princes look alike, but the princesses all look different, like Snow White, Cinderella, and then, Aurora, Sleeping Beauty. Each princess looks different, but the princes all look exactly the same, like they were copied from somewhere, like clones. As for Disney, yesterday it went up by 2.42. Of course, that's somewhat related to the AI trend, so just keep an eye on it. When it goes up, pay attention to that gap from mid-November. This gap, there's a chance it could be filled, but after it's filled, it might become a short-term overbought situation and pull back. So be a bit cautious. There's a chance the gap will be filled, but after that, it could pull back from being overbought. So there's no need to chase it. Another thing is, honestly, Disney right now, I tend to see it more as a short-term rebound after a steep drop, more like a short-term AI-themed bounce after a decline. Why is that? All right, because right now, all the monthly and quarterly moving averages are trending downward. They're all lined up in a bearish formation, all pointing toward the downside. Then, in mid-November, when they released their financial report, the third quarter's revenue missed expectations. Although profits were in line with expectations, they mentioned that in the third quarter report, which was just released in mid-November, not long ago, they said that many of their divisions saw year-over-year revenue declines. So in terms of their financial report, it actually wasn't very good. Their most recent third quarter financial report was not good, it was bad. So this rebound can only be considered a technical rebound after a steep drop. The moving averages are still acting as resistance, so just treat this as a technical rebound after a decline. Alright, maybe one day when their revenue and profits really improve and your Mickey Mouse, Disney stuff all gets tied to AI. Maybe one day when we're live on the show, there's Mickey Mouse next to me. Maybe Cinderella is co-hosting the live stream with me. Could that happen? Maybe it could. One day it's bound to happen. You'll notice that whenever Teacher Zhang is live streaming, I might be talking to someone next to me. Maybe I'm talking to Mickey Mouse, or maybe Cinderella is helping me type, helping me put up the slides. That's basically the vibe. It's like all these visuals can be created. Everything can be made possible. In the future, everything will be open. Now, let's talk about Lululemon for a bit. I'll go over Lululemon quickly. Some people say the Chinese name is Lululemon or Lululemon. It sounds kind of silly, right? Lululemon. Anyway, whatever you call it, this company, Lululemon, is interesting. This company is focused on yoga pants, yoga, and health-related products. Yoga pants or yoga wear sells like crazy. Sales have been booming, and yesterday's revenue is good. No revenue yet. The third quarter report, okay. Q3 report beat expectations at $2.56 billion, and EPS also good. Both exceeded expectations. But he said that weekly revenue, which includes the US and Canada, so what about weekly revenue? It's down 2% year over year, and same-store sales are down 5%, so it's actually declining. It's declining. However, the international market grew by 33%, and overall sales still grew by 2%. But don't forget, their weekly and same-store sales are declining. Weekly and same-store sales are declining. Same-store sales are down 5%. In the last earnings report, he only mentioned that same-store sales were not declining, but actually grew by 1%. That was on September 5th. On September 5th, in that earnings report, he said same-store sales had grown 1% year over year. But this time, he said that same-store sales declined 5% year over year. The main highlight he mentioned was that revenue met expectations and that international market growth was strong. Everything looked great. Fourth quarter revenue also met expectations, but EPS missed expectations. However, both the full-year revenue and profit outlook were better than market expectations, but that's mainly because their previous earnings forecasts were set way too low. In the past, since the beginning of this year, almost every quarterly earnings report has fallen short of expectations and performed poorly. So when it comes to this third quarter's earnings and profit outlook, the market was already pretty pessimistic and cautious. The outlook was conservative, but the company reported good results, so the gap between expectations and reality was huge. Why such a big gap? In the first and second quarters, and even for the whole year, they kept saying things weren't good. Then suddenly in the third quarter, they said sales were good. So it beat expectations. It happened again. So today, before the US stock market opened, the stock surged. And their CEO, he's going to be replaced at the end of January next year as well. Now, you might ask, teacher, is this alliance in Inner Mongolia really because the third and fourth quarters performed well and the outlook is good going forward? So does that mean this lemon won't be sour anymore? Is the stock price going to soar? Let me tell you, you still need to watch it a bit more closely because after all, it's just one quarter and it kind of met expectations. But when it comes to the fourth quarter earnings report, will it really be able to deliver? For example, after Thanksgiving or during the Christmas holiday season, will this strong seasonal demand make the fourth quarter earnings look even better? I think we still need to observe for another 1 or 2 quarters to be on the safe side. As for the technical side of things, everyone should still keep an eye on it. That's because back in January this year, its stock price was around $423, and it's been dropping ever since, down, down, and down. Yesterday, it dipped slightly by 0.33%, but honestly, it's been falling non-stop since January. Meanwhile, the major indices have been climbing steadily, going up for a whole year, not just 1 year, but 3 years in a row. It's been a bull market for 3 consecutive years. The index has been rising for 3 years. US stocks have been rising for 3 years. But Lululemon has just kept falling all year long, dropping and dropping, all the way down for nearly 4 months now. From August to November, it's been forming a base. So just remember, we're in the base building phase right now. I've already drawn these 2 lines. This is the daily K-line chart. These 2 lines mark the platform's base period. 2 dashed lines, one at the bottom serving as support, and one at the top acting as short-term resistance. Right now, during this platform base building phase, all we can say is that it's forming a base. And whether this base will be successful depends on whether it can break through the upper boundary of this platform. Whether it can effectively stand firm and hold above that upper edge is key. If it manages to break above and hold that level, then there's a chance for Lululemon to turn things around, especially if the earnings report brings some positive surprises. After a year of declines, maybe next year, once the base is complete, it could start to rebound a bit and move upward. This is something to look forward to, but the key is that the stock shouldn't break below the bottom of this platform. Just take a quick look at the chart and you'll see. Don't let it fall below the base. As long as it doesn't break down, there's no risk of a new low. Right now, it's still building a base, so I'll say it again. The base is solid, but for it to really take off, it needs to be able to break above that platform. If it can do that, then maybe next year there will be an opportunity. So it's safer to keep watching for a bit longer. Observe a little more, and that's good. As for the US stock market, before the opening, the company I mentioned earlier surged 9% in pre-market trading, which is in line with the expectations for the third and fourth quarters I just talked about. Additionally, Becton Dickinson, this company, also rose 2.6%, and Newmont Corporation went up 2.5%. Companies like Citigroup, Eli Lilly, Constellation Brands, and Netflix all saw pre-market gains of 1.5% to a little over that. There are more companies falling, though, like Broadcom, which dropped sharply by 6.61% in pre-market trading. As we just mentioned, they said their profit margins might shrink. Also, SanDisk fell 3.76% before the market opened. Micron, AMD, and Oracle continued to decline as well, dropping between 1% and 2%. Overall, looking at the US stock market today, I still think it's a mixed bag with both gains and losses. The strong stocks remain strong, and the weaker ones, after rising a lot, are now pulling back a bit, which you can keep an eye on. But it's not enough. Like I said before, it's not enough to drag down the entire index, or it's also not enough for the overall market to shift from a bullish to a bearish trend, so there's no need for everyone to be overly pessimistic. As for the Dow Jones Index, of course, it's a very important indicator, especially as a performance benchmark for Trump. If the Dow stays strong, it might continue to drive the market. For example, when tech stocks rally, the Magnificent Seven can pull the S&P 500 higher as well. The Dow Jones Index just hit a new all-time high again yesterday, surpassing 48,000 points, which is really impressive. Of course, among the companies driving the rally, financial stocks like Goldman Sachs are at the forefront. They're unbeatable. Goldman Sachs rose 2.45% yesterday, and its contribution to the index was 134 points. Companies like Visa, American Express, United Financial, JP Morgan Chase, it's not an exaggeration. The top 5 companies contributed nearly 400 points to the Dow's rise yesterday. Boosting Goldman Sachs, American Express, and Visa is enough to push the index higher. During this rallying process, if the Nasdaq tech stocks consolidate and push higher, the Philadelphia Semiconductor Index follows. The Philadelphia Semiconductor Index fell 0.75% yesterday. This was largely due to Oracle's impact, though it recovered by session end, leaving a small lower shadow. But I still want to remind everyone that although the monthly moving average hasn't been broken yet, in the very short term, you still need to pay attention to the pressure from a pullback after a strong rally. Don't just think that because there was a small lower shadow on yesterday's candlestick, everything looks strong and bullish. No, that's not necessarily the case. Sometimes when a long lower shadow suddenly appears at a historical high, it's actually called a hanging man pattern. It lures you to buy, but after you buy, the price often drops, so be cautious. Remember, after a big rally, it's better to sell some. Only money in your pocket is real profit. If there's a pullback and price nears the monthly or quarterly moving average, buying on the dip is safer. The Magnificent Seven still holds steady, staying above monthly and quarterly moving averages. Index leaders are also very important. Next year, with US midterm elections heating up, when things kick off, they'll need to support the market and push it higher. There needs to be a theme, and there needs to be profits. Of course, the index giants are still just as strong. They're a very important confidence indicator. So when you're trading, you should always treat these opportunities as your top priority and use them as key tools for observation. Alright, that's all for the content related to group trading. Before the US stock market opens, we provide you with the latest updates. So during the break, remember to like, subscribe, and share for us. Finally, I wish you all successful trading, and I'll see you next week.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.